Hey traders, happy Monday everybody. Welcome to Charts and Coffee. Got the giant Viking mug going on here today. Got another interesting open, last trading day of the month. And when I take a look at what we've been dealing with throughout the month of February, one of the things that I do get emails about is just sort of a level of frustration still with the volatility. Just remember, as long as you have a trend, just think of the lows as just being lower lows. Every now and then it's going to look like the markets have a Charlie Brown and Lucy pulls a football away at the last minute type of moment. But as long as you can keep that within the context of just a more volatile trend, whether it's a quiet trend, sort of a vanilla trend, or whether it's a volatile trend, the trend, they say, is your friend. It is absolutely your bestie. So, whenever anyone's been asking or, mentioning that the level of frustration with, the year or even just this month, I really try to say, look, at the end of January, the macroeconomic trend and the technical trend really came into focus, and make that the priority within your book. Now, the only index that has a trend of the four, Russell, Dow, S&P, Nas, the only one of the four indices that still has a trend, as we like to call it, double red, bearish Momo, bearish trend, is the Nasdaq. It's the only one. The S&P is getting close again because if you think about the weighting of tech by way of XLK. What's XLK? It's Apple, it's Microsoft. If the NASDAQ continues to head lower, the Microsoft and Apple narrative continues to be heavy, it will basically outweigh what's going on in financials and in healthcare, right? So keep that in mind. And so Microsoft's looking like a short the rip right here. So that bears some resemblance to what we're seeing in the NASDAQ, that overall downtrend. But what about the yin to the Microsoft yang within the XLK? We have the Apple chop basically reaching up into areas of resistance where I would be really, really cautious here. Now, Apple is not in a downtrend. In fact, it's done a valiant effort of bouncing off the 200 propulsion. Propulsion's basically my replacement for a 200 period exponential moving average. It's where the 8 and 200 cross, remain crossed, and are interacting with price in a specific way to validate the 200 in a way that's more discerning than just throwing a 200 EMA on your chart. But it is where the 200 EMA would be. So with that being said, keep an eye on that. I'm still very bearish. And the reason for that is just the sectors, the individual stocks, and the general structure of this market going into a macroeconomic trend of, yes, you guessed it, are we going to get rate hikes? Yes, I don't want anyone thinking here that there's this easy sigh of relief just because there's a less likely scenario for only a quarter point hike versus a half point hike. Let me show you something here. This right now, this was over 90% yesterday when I sent out the sector and macro notes in the futures room, options room, and of course my sector secrets mastery. We were just over 90%, 92.5, I believe. Now we're under 89. I mean, it doesn't matter. Anything over 80 says that's where the largest, the most dominant expectations are. Half a point is not off the table. So a quarter point hike is still a tightening cycle. It's still hawkish. So I don't know why the markets would think, oh, we're only getting a quarter over a half. It's a rally. I'm actually just choking. It's so ridiculous. So we're going to see likely 3 quarter point hikes because regardless, and I will say, I think that right now, because it's the dominant narrative, Ukraine is getting far more impact than it probably really will matter in the US markets. Yes, it's volatile, but this notion that the Federal Reserve is not going to hike rates because of it, or they're going to hike less, I think is categorically incorrect. We'll see though, right? Because I'm just going to go by what those target rate probabilities are saying. And let's keep in mind, because I want to jump on over here, we have a lot by way of hot zones this week. Take a look here. So Monday's pretty quiet. Chicago PMI, not usually a huge mover, but keep an eye on it. If you have exposure to Australia by way of the EWA, or maybe you're long or short the Aussie dollar, of course, we have the cash rate. For most traders, it's just really not going to matter that much. But what gets interesting, what's going to be the dominant psychology? ISM manufacturing, keep an eye on it. But what's going to be far, far, far more impactful this week, it's always a game of what's relatively more important. The market is not going to make significant moves on Tuesday when we have Powell on Wednesday. Keep that in mind. We have Powell at 10 a.m. He's got his semi-annual testimony about the monetary. Well, here, I'll show you what it says about the monetary policy report. And then again, as if one day isn't enough, he's back on Thursday. Once we get over the Powell, look, I don't think ISM this week is going to matter that much because Powell's going to tell us what to think about the data. And then we get the jobs numbers. Remember, the U.S. Central Bank has a dual mandate, both inflation and jobs. All right, so we got a lot going on. Hope that gives you a quick rundown of what I've got on my radar. And as always, this show is about your questions. So let's jump into them now. All right, kicking it off, Christian. When looking to take profits on my long calls, long puts, how do I go about deciding? Is it strictly based on price action of underlying, or is it based on a percentage profits of percentage profit of the option, like 50%? Okay, so let me unpack that. How do I go about deciding? Well, first of all, it's decided when I put in the alerts. So for those of you that get my alerts, whether that be the futures room, options room, or my sector secrets mastery, I'll put in an aggressive, moderate, and conservative trigger. I'll let you know what option I want to buy when that price criteria is met. And I include the target. That's going to be part of the initial trading plan. So it's always price-based. As far as, is it price action of the underlying? Yes. Yes. Is it based on a percentage of profit of the option? Never. If there's ever going to be something that I would look at alongside the price action, the support, the resistance of the underlying, it would be historical volatility. So never, we're up 25%. Who cares, right? Where is that within the construct of daily price movement, the historical volatility, or gap closes, Darvis levels, previous support and resistance, etc. So I hope that helps. Thanks for the question. Good stuff. All right, next up is, all right, should we be fading the opening gap? Hey there, Mike. Should we be fading the opening gap? So if I'm going to consider a gap fade, it's going to be, well, first of all, we're going to head on over to a 5-minute chart. We're also going to turn on our hourly price movement ranges. Then we're going to go ahead and determine, is there any volume ledge action where we see more volume at a particular level than another, right? So far, we're in the thick of the volume. You can see that there. We're in the thick of it. That's that. See those, well, let me move this over a little bit. See all this jutting out from the right side of my chart? There's your point of control, by the way, since about the European Open. Okay, so the next thing that we want to look at, is the first 5 minutes after the bell. Now, some traders will look to fade the gap after 1 minute. That's too twitchy for me. 1 to 3 is probably where your more aggro Momo players are going to be. Now, since it's a gap down, the fade is a buy, right? So the gap direction determines which way is the quote unquote fade. Fade, just like a fadeaway jump shot, right? We're going backwards. Is that change in momentum. So gap down is about a fade buy. I like to wait 5 minutes. I know if there's ever a choice to be made, aggro, moderate, conservative, I'm usually going to be on the conservative side of things. So if I can wait for that first 5 minutes and see which way the momentum goes, So for those of you that are in the futures room or the sector secrets mastery, or you've taken any of my day trading classes, you know that with those classes came with uh, the FMB clearing range tool or the LSG FMB. Rog, where do you get these names? Those initials are always an homage to whoever created the tool. With me, who kind of was part of the coding. And so that's why I get my kooky names from. I always like to give some credit to the folks that said, hey, Rog, I think we can do it this way. What do you think about this coding? So that's where the weird names come from. But it is a clearing range tool. Put the 5-minute setting on there. Put the 5-minute setting on there. And I think you will be all set. And then wait for the breach of that 5-minute. I'm not looking for a short, although we could see a continuation to the downside. But initially, in the first 30 minutes, after a gap or a true gap, I'll be looking initially for a buy. And then, overall, I'm bearish. So hope that helps. All right, what about puts on XLC? All right, so as far as puts on XLC go, Kim, the main issue I have with XLC is that it is really very, hang on one sec. There we go. It's quite illiquid. It's really illiquid. The fives, 5, 10, 15, 20, if you look at the zeros and the fives, that's where usually you'll see the open interest. So wait for at least 500 open interest. That being said, jumping into XLC. Now, if I'm looking at XLC, one thing that we do know is that as far as being a relative outperformer, XLC looks as weak, if not weaker than the Qs. So I'm going to actually change this to QQQ. And so I can compare what the XLC is doing to the QQQ, where it's heavily weighted. Do you see that they are darn near identical? They're both very weak. And they basically turned weak around the same time. XLC has been a dumpster fire. And I mean that in the best of ways, because if we want a great short, we want an established red, bearish momentum, bearish trend short. We've got it. We're bouncing through the 8, which is always an aggressive setup. And we're heading towards the 21. See the green dots? That's your 8 by 21 propulsion, your 8 exponential crossing down your 21, interacting with price, validating the 21 in a way that's actually more discerning, sort of an auto, kind of a smart EMA, as I like to call it. And we'd like to get up near that 70 level. So 70 will likely, in fact, you know what? Let me look real quick. 70 should have plenty of liquidity. I would not get any closer. Follow where the open interest is, but 70 should have some liquidity. But 70 puts, oh yeah, you're fine. 70 puts for June, 70 puts for May. Oh yeah, you're right as rain. So I would keep an eye on that. I want a slightly higher high, and then we'll see if we can't play that. Now remember, if you want to go multi-chart, right, this is something that we do in the sector secret room, right? This is the boats and tide. This is the way that I scan for relative outperformance. This is the best way to do it. By the way, it's a free way to do it. You all have the tools. So if you're in any one of the memberships, you have the tops layout that I've shared with you all. You have all the individual components to put a chart like this together. This is the best way to look at relative outperformance, right? Grab candles, wave, propulsion, and the JT trend trade flags, right? These JT trend trade flags. So here's XLC. If you want an individual boat within this tide, Comcast looks great for a short. Facebook is great for a short, but be discerning, right? Be discerning, because there are corners of this particular tide, this ETF, that are somewhat neutral. But for the most part, they look like good shorts when you compare how many would be bearish to neutral versus the very few that are slightly bullish. Let's say take ATVI out of it, because that's a Microsoft narrative. But I like that XLC, Kim. So good eye there. All right. So the next up, Enduro Mom. Is there such a thing as the plunge? Oh, the plunge protection team. Look, gang, I'm going to say something that sort of feeds the conspiracy theorists, but at the same time is just being realistic. And you know what? There was someone I follow tweeted this. I had no idea that there was going to be a documentary on this. If you follow me on Twitter, let's see. Oh, this is really cool. I retweeted this. The brain, how many thoughts you have per day. How many of them are actually making you feel good? All right, here we go. This right there. So this right here, just caught the Gaming Wall Street trailer. Check that out. This is an HBO documentary 2-part series about what happened during GameStop. Enduro Mom, I don't know about the plunge protection team and, if anyone's out there buying. But here's the thing. I wouldn't say no. I wouldn't say yes. What I'm going to say is whatever we think is out there trying to get us, whatever's the dark at the top of the stairs, are the markets manipulated? Of course they are. There's too much money to be made for them not to be. There's too many people with influence, right? When one of the hedgies goes on CNBC, that's manipulation. So remember, whatever they do, they're far bigger than me. They're far bigger than us. They're moving more money. They have more connections. But here's the thing. It's like elephants in the sand. I don't need to see the elephants to be able to see the footprints. As long as we have price and volume, I think we can see what they're going to do. So our ability as retail traders is, one, we're not moving huge size. People don't really see us coming. Two, we can change our minds very, very quickly because we are moving small size. And three, we can watch them. I believe the markets are manipulated. I thought that since the day I started. But I think people somehow equate that to, well, if the game is rigged, we can't win. That's not true. That's not true. I don't think that's true at all. So yeah, I'm not going to be Pollyanna and say they're not manipulated in some way, whether it's plunge protection team or what's going on with high frequency or what's going on with algos. I don't care. We have volume and we have price. And as long as we have those things, we're good. We're good. All right. So let me get back to, and we have structure, right? Whatever the powers that be, whatever they're doing, it's being played out in price, right? So if we can find value area high, value area low, points of control, and volume ledges, we see where the size is at. Price and volume. To me, that decodes all the boogeymen in the markets. All those things we're scared of and think are going to ruin our trading lives. We have those. That's always what I believe is going to allow us to have the ability to still be traders in this obviously kooky environment. So I heard are people buying? Yeah, probably, but I don't think it has to be a plunge protection team. There's traders and investors out there that have a very long time horizon, and their opinion is anytime the markets are selling off by a certain percentage, they're just going to go buy it. So, maybe there is, maybe there isn't, but I don't think it changes what we do. Does that make sense? I sure hope it did. All right. So, what's up? What else do we have here? Hey there, Tim. Thanks for the notes of the week. Super helpful. How do dividends affect my decision to enter on the radar? So dividend date, Tim, you can see that at the bottom of the screen on TOS, right? You'll get the earnings date. You'll get the dividend date. My feeling is going into dividends, generally, there might be a slightly bullish tendency, and then after there's a little bit of a sell-off. So it's a slight timing and volatility event, but not anything that I find tactical that's going to actually set a trade up, if that makes any sense. I'm not looking to set a trade up based on dividends, but I will think about how they could trigger specific directional volatility. All right. Hey there, Beverly. I kept in mind now what you said last week, patience. Thank you for reminding me. Beverly, everything I tell you all, I'm trying to remind myself too, right? I'm trying to remind myself, Raghee, be patient, no FOMO. There's always going to be another trade. Don't think that's the one trade that's going to change your life. No, I'm with you, but I say it as much to myself as well. All right. Can I share my thoughts on URA? Oh, and Jean, do you have access to the HPMRs in the options room? No, my friend. They're in the futures room because it's a futures HPMR. And I throw the futures in the ETFs because we trade futures and sectors in the mastery. So I don't do stock one at the moment. We don't have a stock pack, which would be more appropriate to the options room. All right, URA, uranium, URA, CCJ, they're always on the radar. Right now, I can't say I'm loving what I'm seeing here, but if I'm going to look at URA and we'll throw CCJ in there so we can look at the comparison. Let's see what we have here. So what I'm looking for is what's the structure. So the top row is the URA, the bottom row is CCJ. They're both pretty neutral, but URA has spent a brief period of time red over red. So I would say URA would be the better candidate for a potential short, but neither of them are high on the list. That being said, take a look here. Look at our Darvis. That might be kind of nice. That might be kind of nice. Right in here, we've got a Darvis level. Right in here, we've got a Darvis level. Got another Darvis level right there. So use the automated support and resistance of the Darvis to help you determine where those support and resistance levels are. And yes, we are obviously climbing into a zone that I would think is going to be increasingly, there you go, increasingly overbought. And why would I say that? Well, in chop, it becomes an overbought, oversold conversation. In a trend, it's short the rips or buy the dips, right? So take a look at a slow stochastic. I've shared with you all what I use for a slow stochastic, 21K, 3D, 80-20. That has worked the best. I've tried all sorts of settings. That is the best. And you can see we're heading up into that area right now. And it's jiving with that series of Darvis levels. Okay, so there's a really good walkthrough on how I use chop, a yellow trend, a neutral trend, and a slow stochastic. All right, just like that, gang, we are out of time. So thanks as always for joining me for Charts and Coffee. Hopefully everyone has already marked down on their calendar March 9, 8 p.m. Looking really forward to that. That's just next Wednesday. We're going to go over what I've been doing to come back from 4 losers in a row to kick off the year, and then the tear that we've been on since January 26th. What did I do in January? What tools did I use to sort of right the ship and then get on the win streak that we've been on since the clarity? Not that I did something, no secret squiggle was new, nothing like that. What did we do to realize we had an edge again in the market? How do we recognize that edge? So as always, thanks for your time. Thanks for the awesome questions. Leave your comments, leave your questions below. As always, smash that like button. Let us know we're heading in the right direction with the content and preparing you for the morning. What a morning it's going to be. I'll see y'all tomorrow. Same time, same station. Be good to each other.